Are you tired of hearing that building wealth means constantly stressing over the market, tracking every tiny fluctuation, and making risky moves? What if you could grow your wealth with ease, patience, and without the constant anxiety? In this video, we shall explore 5 investment habits that can help you build long-term wealth without the usual stress. These habits are not about taking wild risks or trying to time the market perfectly. Instead, they focus on creating systems that allow your money to grow steadily and predictably. If you're tired of worrying about every little market move and want to adopt a more relaxed yet effective approach to investing, keep watching. 1. Automate your investments. Let's start with one of the most effective habits for building wealth: automating your investments. It's simple but powerful. The idea is to pay yourself first. By setting up automatic transfers from your paycheck directly to your investment accounts, you ensure that money is always working for you, even when you're not paying attention to it. This habit removes the need for willpower and prevents you from spending the money elsewhere. By automating, you take emotion out of the process. No more worrying about whether it's the right time to invest. Your money is automatically transferred each month, regardless of market conditions, meaning you're consistently building wealth over time. This is the ultimate stress-free strategy. Once it's set up, you don't have to think about it again. Even if you're just starting out, automating small amounts can create big, long-term growth. Plus, it takes only a few minutes to set up, and the results are automatic. Over the long haul, this habit helps you stay disciplined and make steady progress without being constantly tied to the markets. Even better, automation helps you avoid the temptation to time the market or make emotional decisions during market volatility. When you don't have to think about the market daily, you avoid the anxiety that comes with constant price changes. It also ensures that you keep saving and investing, even during times when it feels harder to do so, like during financial setbacks or market downturns. Over time, this consistency pays off, helping you build wealth in a reliable, stress-free way. 2. Think long-term, years, not days. One of the biggest causes of stress for investors is watching the daily ups and downs of the market. But what if I told you that successful investors don't focus on daily fluctuations? Instead, they think long-term, years, even decades. They understand that the real power of investing comes from staying in the market, not timing it perfectly. Investing with a long-term mindset allows compound growth to do the heavy lifting for you. When you leave your investments alone, letting them grow over time, you'll be amazed at how much your money can accumulate. Stress comes from trying to time the market, guessing when to buy and sell based on short-term movements. This can be exhausting, and let's be honest, no one can consistently predict short-term market changes. So instead of checking the market every day, focus on the bigger picture. Put your money in quality investments and hold them for the long run. Whether it's 5, 10, or 20 years, the market will reward patience and your investments will grow steadily. Don't sweat the small stuff. Your long-term strategy is what matters most. Additionally, long-term thinking helps you ignore the noise that often leads to impulsive decisions. Market corrections and short-term fluctuations are normal, and they often present opportunities to buy at a discount. By staying invested for the long term, you also benefit from lower transaction costs, since you're not constantly buying and selling based on short-term predictions. The beauty of long-term investing is that it minimizes risk and maximizes your ability to build wealth consistently. 3. Diversify your portfolio, reduce risk, maximize stability. Another essential habit is diversification. This means spreading your investments across different asset classes: stocks, bonds, real estate, gold, and more. Why is this so important? Well, putting all your money into one stock or asset is a recipe for anxiety. When that stock performs poorly, so does your portfolio. By diversifying, you reduce the risk of having all your wealth tied to a single investment. Different assets perform well in different market conditions. For example, when stocks are down, bonds or gold might be doing well, helping to balance out any losses. This way, even when one part of your portfolio isn't performing great, the other parts are helping to keep things stable. Diversification doesn't mean spreading your money too thin. It's about having a mix of different types of investments that complement each other. The right balance will help you sleep better at night, knowing that your money isn't exposed to too much risk. It also helps you capture opportunities across various sectors and markets, boosting your chances of long-term success. As a result, diversification can significantly improve your portfolio's overall performance, especially in unpredictable markets. A well-diversified portfolio helps reduce volatility, ensuring smoother returns even in turbulent times. Plus, it allows you to adjust and pivot based on changing market conditions, always ensuring that your wealth is protected in multiple ways. 4. Maintain an emergency fund. One of the most stressful things that can happen to an investor is needing to sell investments during a market downturn to cover an unexpected expense. That's why it's crucial to have an emergency fund. By setting aside 3 to 6 months of living expenses in a liquid, easily accessible account, you create a financial cushion that allows you to weather any storms without touching your investments. The key here is that an emergency fund gives you the flexibility to leave your investments alone when life throws a curveball, whether it's a car repair, medical bills, or unexpected travel costs. Knowing that you can cover these expenses without disrupting your financial goals allows you to stay focused on long-term growth. Plus, having an emergency fund in place also keeps you from panicking when a market dips. Instead of feeling forced to sell investments at a loss, you have the peace of mind to hold onto your assets and let them recover. It's a simple habit that can make a huge difference in how you approach both investing and daily life. Furthermore, an emergency fund gives you the financial flexibility to take advantage of unexpected opportunities, like investing during a market correction or having the ability to seize a business or career opportunity. It also serves as a buffer during periods of unemployment, protecting you from the emotional and financial stress that comes with job loss. Having this safety net allows you to stay calm and make better decisions without being rushed into selling investments or making irrational choices. 5. Invest only in what you understand. Finally, one of the best ways to avoid stress in your investment journey is to stick to what you understand. Complexity breeds uncertainty and worry. The more complicated an investment is, the harder it becomes to understand its risks and rewards, and this creates unnecessary stress. Stick to simple, transparent investment vehicles like low-cost index funds or companies with clear, proven business models. If you can't explain how an investment makes money or what it's based on, it's likely best to avoid it. There's no need to chase after the latest hot stock or complex financial products that promise big returns but come with high risk. By focusing on investments that you understand, you'll feel more confident and in control of your financial decisions. This approach doesn't mean avoiding growth. It simply means taking the time to learn about the investments you choose. Keep things simple, and you'll feel more comfortable watching your wealth grow steadily over time. Additionally, investing in what you understand means you can easily evaluate potential risks and rewards, and it's easier to stay calm during market volatility. By sticking to familiar investments, you'll also be more likely to stay disciplined and avoid making emotional decisions that can negatively impact your portfolio. The fewer surprises, the less stress, and the greater the chance of long-term financial success. Simplicity and clarity are key to successful investing. Focus on what makes sense to you and let that guide your strategy. So there you have it, 5 investment habits that will help you build wealth without the stress. These habits aren't about luck. They're about creating a system, being patient, and sticking to what works. If you follow these principles, you can achieve financial success without constantly worrying about the market. Which of these habits will you start incorporating into your life today? Let me know in the comments below. If you enjoyed this video, be sure to hit the like button, share it with your friends, and subscribe to the channel for more tips on smart investing. Building wealth doesn't need to be stressful. It's all about making the right moves at the right time. Thanks for watching, and I'll see you in the next video.